I am Patrick, and this is Think Wealth. For 2019, we believe investors should focus on three key areas. Number one, actively managed portfolios. Number two, defensive global diversified portfolios. And number three, dividend yield portfolios. This will allow investors to capture the best growth opportunities and trends globally while managing their risks. In 2019, we expect global growth at 2.9% compared to 3.1% in 2018. This is on the back of slower US economic activity and to some extent, tightening of monetary policy in a number of developed economies, especially the US. However, investors are urged to understand that this is just a slower growth, not negative growth. In our view, there are no signs of a recession happening over the next 12 to 18 months. In the US, corporate earnings guidance for 2019 are affected by two key factors. Number one, the effects by tax cuts are fading. Number two, the current trade conflict between the US and China remains uncertain. Nevertheless, the US economy remains robust, with growth projected at 2.6% per annum in 2019. The US monetary policy is expected to tighten going forward. For example, the Federal Reserve is raising rates in December, followed by at least 2 to 3 more increases moving forward. In Europe, the European Central Bank has commented they should end its asset purchases in January and perhaps consider raising rates at the end of 2019. This is provided the economic data is sufficiently strong to support the case for raising interest rates. Back in Japan, the tepid inflation outlook will make Bank of Japan keep its monetary policy extremely accommodative. Economic fundamentals in Asia continues to be on a strong footing despite the fact that it's starting to slow down. In China, for example, Chinese policymakers have announced a series of measures to stabilize economic performances and restore investor confidence, especially in the A-share market. In ASEAN, both Indonesia and Philippines central banks have started to raise rates in 2018, and this has started to stabilize the Indonesian rupiah and the Philippine peso. In conclusion, we see the overall investment outlook are as follows. Number one, we expect moderate economic growth, especially in the developed economies. Note that this is just a slowdown and there are no signs of recession over the next 12 to 18 months. Number two, monetary policy in certain markets are expected to tighten, especially in the US and certain countries like Indonesia. Number three, Asia Pacific ex-Japan equities appear attractive after the recent corrections. Our view is that in 2019, diversification is key. In order to navigate through this market volatility, our recommendation is that clients hold a defensive global portfolio that focuses on yield and dividend.